In business today, three things to know. First, over the cliff. Stocks put in the worst month all year with a 317-point drop on Thursday. Is this a correction, or has the market realized that the world has gone mad? Then, Americans in the hole. 1 in 3 are in so much debt, they have debt collectors after them. And BYOD, bring your own devices to work. How employers are changing the rules of the office. Arise Exchange starts now. Hello, everyone. I'm Andrew Schmertz. July jitters as the market turns in the worst monthly performance all year. In fact, it's the first down month for the Dow since January. Here are the final numbers for the day. Dow Jones Industrial Average closing down $317.06 to 16,563. The S&P 500 off 40 points. That's 2% to 1930. The NASDAQ having the worst performance of the day, down better than 2% to 4369.77. For the month now, the Dow is down 392 points. Taking a look at some of our top stocks that we're watching today as the corporate earnings season continues. The world's largest oil company, Exxon, reporting a decline in its global oil production that fell to its lowest level in 5 years. However, the company did beat earnings expectations for its second quarter. Earnings of $2.05, more than a dime above estimates. Exxon closing down $4.31. Time Warner Cable reported revenue below expectations of $5.7 billion, and earnings per share of $1.76 was 20 cents short of expectations. Time Warner sliding nearly 5% down to $145.10. Pharmaceutical company AstraZeneca reporting more than $6.5 billion of revenue for its second quarter. Earnings per share of $1.30 did beat estimates. AstraZeneca closing down 40 cents. And a look at commodities on this Thursday. Gold closing down better than 1%, and oil pulling back 2.25% to 98.01. The market sold off despite more signs that the economy is improving. Jobless claims fell to an 8-year low. The 4-week moving average for new claims fell to 297,250. That's the best number since April of 2006. Tomorrow, the U.S. Labor Department releases the July unemployment rate. That is the big number that we'll look at. Cathy Boyle is president of Chapin Hill Advisors and joins us back here on Arise Exchange. So, Cathy, what happened to the market today?
Well, I think Argentina was the straw that broke the camel's back, right? We've been ignoring Gaza and Israel, Iraq's noise, Russia, Ukraine. We've been ignoring so much.
Ebola, we're ignoring all that.
Yes, exactly. And we've been focusing on what the Fed wants us to focus on, which is jobs. So we're growing at 2 to 250,000 new jobs, but we're not growing anywhere near enough to absorb the new people coming in. There's still a lot of regular Americans that are really hurting. The top 85 billionaires in the world are collectively worth more than 3.4 billion people in the world.
So we're looking at this growing economic inequality gap.
Exactly.
Let me ask you about Argentina first. Walk us through what happened today and what the risk is.
Well, so the risk is that Argentina could default on their bonds. So there's a big hedge fund that owns a bunch of their bonds, and they're standing at a standoff. They're basically saying, we want X, and Argentina doesn't want to pay X. So Argentina is trying to do a workaround, but they missed a huge debt payment, $539 million payment, so they're technically in default. So part of the problem is...
Argentina's defaulted before, by the way.
It has, second time.
It's been down this road.
It has, but, this is really shaky ground now because, a lot of the big banks, investment banks, have things called CDCs, which are basically some fancy kind of subordinated debt, essentially, okay? Gizmos with derivatives.
So there's more exposure than the average retail investor may think there is to Argentina.
Exactly. And so the big banks, supposedly, the rumor today was that JP Morgan was stepping up to the plate to buy those bonds at a price that the hedge fund will like in order to save Argentina from going through default, because you don't want this cascading effect and all these things starting to crash. A lot of leverage on these things.
Are we overthinking what happened to the market a little bit today? Is it possible that we're seeing this slide off because we've been saying that at some point people are going to take money off the table and there's going to be a little bit of a pullback?
I just met with a new potential client, and I thought they had a lot of exposure to the market, but greed rules, and people want to ride it until they think they're going to see it coming. Everybody thinks it's going to come. Now, what if tomorrow's another 300 negative? What if another one in a row? Now we lost 1,000 points in about a week. So now the fear starts to go. And once you break these technical levels, so 1950 on the S&P. Next one, boom, down. Next one, 25 points below, et cetera. It starts to cascade
And the
down.
next word then you talk about is capitulation, when everybody is feared and gives up and sells, and then new people can come in and buy.
Well,
we're
yes,
a little bit away from that.
We're quite a ways away from that. We just had one tiny little blip here, okay? But look how much the Russell is down. The small cap, mid cap has been the leading sector for the last couple of years, outperformed. Everybody's been loving it. They were down 2% as of last week, down 6% for the month of July.
So what are you telling the investors right now?
Well, we've been cautious. We've been erring towards some very good fixed income managers who have been able to recover when the market's blipped. And then we will use managers who actually hedge part of the portfolio. Mm-hmm. So any new money that we put to work, which we put some to work this week, has really been going along the lines of managers who will hedge the portfolios. Okay,
you mentioned the Fed and you mentioned unemployment jobless numbers. We continue to march towards slightly better numbers, but as you say, not growing fast enough. Right. Does that give Janet Yellen at least the wiggle room to not do anything on interest rates?
Well, she may, but I think the Fed is sort of losing their luster at this point. I don't think the Fed is in control at this point. The market can take over. Rates can go up just because the fear, people go to treasuries, will yield down. But in general, the market can have its own dance, and the Fed is not in control. The Fed's been this liquidity, just a sugar high, continue to pump it out. At some point, it doesn't have an effect, and they may have to raise rates sooner. Everybody's assuming that they're going to have this nice, easy...
Everybody we've been talking to says 2015, yet there's this drumbeat of news that says they may have to act sooner, and maybe that's spooking the markets too.
And one little tiny move, even a quarter point, is going to spook this market if it's spooked, because it doesn't take much to push it over the edge.
Okay, Cathy Boyle of Chapin Hill Advisors. An exciting day to talk about this, right? Yeah. Okay. On Capitol Hill today, a good reminder that some people are good at getting paid for doing nothing. House Republicans had to withdraw their own border protection bill because Speaker of the House John Boehner feared his own caucus would defeat it. And yesterday, the House voted to sue President Obama for their alleged abuse of power, his alleged abuse of power. Here's what the president had to say.
Now, you could say that, all right, this is a harmless political stunt, except it wastes America's time. You guys are all paying for it as taxpayers. It's not very productive. But it's not going to stop me from doing what I think needs to be done in order to help families all across this country.
Arise Washington Bureau Chief James Blue joins us now with more details. James, let's start with the immigration and how much of an embarrassment was this to the Speaker of the House? There was word that this was coming because the Republican Congressman Ted Cruz said he was going to rally the troops to vote against it.
Yeah, no, and Andrew, just within the last hour, Republicans on the House realizing how bad they would look going home with a crisis at the border without doing anything about it, they've actually decided to delay the recess, and they are actually going to keep the House open with the hopes of passing something that would also pass in the Senate and actually get the president's signature. I mean, they really realized, Andrew, that they could not go home. They couldn't sort of leave town with this crisis at the border really sort of spinning out of control as it has been over the past 3 or 4 weeks.
Yeah, they're really fiddling while Rome burns, and that's sort of the impression that they're getting out there. And while the president's approval ratings are certainly in the tank, the Republicans are thoroughly able to capitalize on that by something like this today. So what would the bill look like that they think can get through their own?
And this is where whips in the House are having struggle. No one wants to give President Obama the billions, the 3.9 that he asked for. They're talking about 2.9, but they are very concerned that instead of giving President Obama this additional authority and these monies, that they will sort of give him a blank check, and they think it will be a victory for him. And so the real tension has been between those members of the House who'd rather do nothing, as you said, spurred on by Senator Ted Cruz, and those who recognize, especially those from the border states, that unless something's done, those states are really going to hurt. And so there's a real tension within the Republican caucus. And as you know, the Republican caucus is under new leadership. This is a real test, and many people believe they are failing.
And while they were able to do nothing today, they did something certainly not productive yesterday, where they decided they were going to sue the president. Very difficult to sue the executive branch because of these executive orders. And no matter what you say about the executive orders, there's not a whole lot of people who think this lawsuit's going to go anywhere, except for the editorial page, I should say, of the Wall Street Journal, who says this is a much bigger issue than the Republicans calling for impeachment.
Right. No, what they are really trying to do, Andrew, and it is working for both parties, is to give people something to work and to campaign on in the November midterm elections. The suit is actually of very little merit, but it really energizes both bases of the party, and they recognize failing to solve and deal with the crisis at the border, not dealing with the jobs program that the president wants, really sort of abdicating responsibility in some ways, people would say, in doing anything. At least they can say, we're taking the president to court.
And Obama may be able to use that all do-nothing Congress slogan in the midterm elections. James Blue in Washington, thank you.
Thank you.
Coming up, who wants the electric company? States vie for a new Tesla and Panasonic joint factory. We'll tell you about it when Arise Exchange comes back.
I think news does make people put things in black and white terms just so that they have a dividing line between what their viewers like and dislike.
When they see a person of color, they either think that they're not going to do anything, they're either on drugs or they got pregnant at an early age, and I just want to say that that's not true.
It tends to reflect more the interests of the upper income people and the upper income interests.
Arise News, every culture, every angle.
Mainstream news has covered all of the issues of the world, which are like this, through a very narrow lens. And at Arise News, we do things different. We cover every culture, every angle. Our mission is to go to these places, to these communities, whether they're in Africa, whether they're in Europe, Asia, the United States, the Caribbean. And we're going to find these stories, and we're going to tell them to our audience. Stories that they probably never heard of before, and stories that they'll find interesting and engaging.
Tesla stories, and we have two of them for you today. First, they released earnings. They reported earnings of 11 cents a share, and that beat Bloomberg's consensus for earnings of just 4 cents a share. And it's a turnaround from a year ago when they lost 26 cents a share. Revenue coming in at $857.5 million, and that blew away estimates of $813 million. Meantime, the electric car company also reporting it's getting a big boost from Panasonic. This after the two companies announced that they have agreed on a deal to build a huge battery plant in the U.S. The Gigafactory will require investment of up to $5 billion and will provide more than 6,500 jobs. The car coach, Lauren Fix, is on the phone with more. Lauren, first your impression. Okay, we do not have Lauren right now. We will try to get back to her a little bit later. Let's turn to our business ticker stories making headlines across the nation and the world. The death toll from an outbreak of Ebola in West Africa has risen to 729, according to the World Health Organization. 59 people have been identified as coming into contact with Patrick Sawyer, the first American to die from the virus in Nigeria. A top doctor, Sheikh Umar Khan from Sierra Leone, treated more than 100 Ebola patients, and he is also among the victims. And so is a Texas doctor who is said to be seriously ill from treating patients in Liberia. Target has tapped an ex-Pepsi executive as its new CEO. Brian Cornell will be the first outsider to lead the discount retailer. Target is trying to fix its image in wake of a massive data breach last year. Target has more than 1,900 stores in the U.S. and Canada. European companies are already feeling the pressure from the latest rounds of sanctions against Russia even before they take effect. This according to European business leaders and area economists. Among the companies and industries that have been impacted, Germany's machinery industry cut its forecast over uncertainty between Germany and Russia. Adidas, also based in Germany, says it will significantly reduce the number of its stores in the region to reduce risk and protect profit. And British oil company BP said sanctions against Moscow could weaken its earnings. Just a few companies saying so far those sanctions could impact them. And how quickly your fortunes can change, especially in a game of Texas Hold'em. Poker pro Connor Drynan thought he had the game in the bag when he was dealt a pair of aces. So he went all in on a $1 million bet. Little did he know that his opponent, Kerry Katz, had a pocket full of aces, too.
And now the river card. No!
I'm so sorry.
Drynan flushed out of this tournament.
$1 million buy-in wiped out in aces versus aces.
Wow. Connor Drynan just became the answer to a wicked poker trivia question. That is brutal.
Wow is right. 3 hearts later, as you notice, the river was pulled. That's the last card in the game, giving Drynen's opponent a flush of hearts and all of his money. Maybe next time someone reminds him that he can't win every pot, he will listen. Which takes us, by the way, to debt, because maybe he has some now. Debt. Many of us have struggled with it at one time or another. Get this, 1 in 3 adults, or 77 million Americans, are not only in debt, but they have collection agencies after them. That's according to the Urban Institute. The study looked at debt state by state and found that Nevada had the highest percentage of residents with debt. Wonder why? Well, North Dakota had the lowest. Rebecca Gershowitz is an internet counseling manager at ClearPoint Credit Counseling Solutions. That is a nonprofit agency that is partially funded by the credit card industry, as well as from client fees and private and government grants. And she is in Washington, D.C. Rebecca, welcome to the show. Are you surprised that 1 in 3 Americans have collection agencies after them?
Actually, I'm not surprised. We get a lot of clients from a lot of different walks of life, but the majority of Americans we're dealing with either have debts that are in the collection process or at least debts that are delinquent. So this is definitely something that we're seeing that's very widespread.
And I imagine as consumer confidence rises, debt increases, right? We feel better about things and we go start charging our credit cards. Is that true?
That is true, and as things start to rebound and people start finding jobs again, they're in a position where they're trying to figure out what to do with a situation that was created by, possibly a period of unemployment or a period of lower income. So now they're kind of in the recovery phase and trying to figure out how to deal with those negative situations going forward.
And when we're talking about debt, we're sort of talking about bad debt here, right? We're talking about credit card debt, not necessarily mortgages.
Correct. Credit cards, medical bills, past due child support, things of that nature.
Are you surprised that it's 1 in 3 now, and even as the economy comes back, or is this, do you think, a residual effect of just the Great Recession?
I do think it's residual.
Okay. And so what should Americans do who find themselves in debt and, the collectors are sort of calling?
They want to be proactive. The best thing to do is find out where you stand with all of your creditors. It's a great idea to pull a copy of your credit report. Annualcreditreport.com is a fantastic source where you can pull your credit report for free from all 3 bureaus to find out what's out there and see if there are things that are reporting against you that may not necessarily be true. If so, you can dispute those right through the website. Once you do find out what you owe and what creditors you owe, be proactive. Contact them. Ask for alternate repayment plans if what they're wanting right now is too high. And if they're not willing to work with you and find a resolution that you can afford, try contacting an outside nonprofit credit counseling agency. We can help you determine a budget, help you look over your expenses, and figure out a plan for how to deal with those accounts.
Now it's important to note, though, that do you turn away people from thinking about bankruptcy? Because the credit card industry certainly has a vested interest in getting people to pay something. Once you file for bankruptcy, they often get nothing.
Well, we can't offer any sort of legal advice. So we are going to help the clients look over their entire financial situation to determine what the best path is. Sometimes they may want to talk to an attorney to see what kind of legal advice they can get, which may just be because a creditor may be pursuing them, looking for a judgment or trying to garnish wages. And in that situation, that is something that they would want to seek an attorney for. Can
you advise them on how to sort of get creditors to back off? Because there's all these reports of how aggressive they can become because they obviously earn some money, collection agencies, from collecting
right. Well,
some
and
of this
you want to know your rights. Check the Fair Debt Collection Practices Act to make sure that you know your rights, know when they can be calling you and when they can't, what kind of information they can be gathering about you from outside sources. You really need to be informed as to what kind of rights you're entitled to and what they can do as well.
Now, there's a lot of reasons people end up in debt. Certainly, there's sometimes health crisis, there's unemployment, but there's also the idea that you should live within your means. And does your agency help people avoid getting to the point in the first place where... Go ahead.
Yes, I'm sorry. Absolutely. We take a look at the whole financial picture. We look at your income and what your household expenses are. So that's the first step. We try to help you figure out how to align your expenses with what you're making, looking at what are essentials and what might be inessentials and might be able to be cut back.
Okay, Rebecca Gershowitz with ClearPoint Credit Counseling Solutions. Thank you.
Thank you.
Let's turn back now to the Tesla story. As we mentioned, they reported earnings today, and they're talking about this big plant that's going to get built somewhere, and there's a whole bunch of states who certainly want it. Lauren Fix, the car coach, is on the phone, I think now. Lauren, do we have you?
Yeah, I'm here.
Okay. We pulled you off to the side of the road, I hope.
Yeah, absolutely.
First, your comments and your thoughts about Tesla's numbers, which appear to be terrific.
Well, when it comes to Tesla, the numbers are hard because you've got a lot of people that want to buy these cars. There's a lot of people waiting for these cars. There's lots of excitement. Plus, they made a lot of money off the stock market. And, of course, once these gigafactories come into play, we'll see what really happens. But, I hope they make it. I think they should make a lot of money. But, there's a lot of speculators out there that aren't wishing them well. So we'll see what the results are, as they sell more cars and as they start to expand to compete with the other manufacturers.
Okay. What is this deal between Tesla and Panasonic? I think of Panasonic. I don't know what Panasonic does anymore.
Well, Panasonic makes batteries. They used to make TVs and all kinds of things that we remember, so you and I are dating ourselves.
It wasn't that long ago. Okay, so they make batteries. So tell us about this plant that they're going to build.
Tesla's partnering with Panasonic together to create a new gigafactory, and Tesla will provide the land and the infrastructure and the maintenance, while Panasonic is going to supply the machinery and the ability to build these cells. Now, the states are obviously, we're considering the things that we've talked about before, which is California and Arizona and Texas and New Mexico and Nevada, and I'm sure there's going to be some politics involved because they can't sell in every single state in the country. And because of that, it gives Tesla an opportunity to say, we'll build this plant in your area. It's going to bring 6,500 jobs and $5 billion of the revenue by 2020. What do you say? So the state that they may want to sell in, they're already selling in California, but they can't sell in Texas. This may force Texas to say, yes, we really want the battery factory, and in exchange, we'll allow you to sell your vehicles within our facility, within our state. That may
conversely, real quickly here, California may want to change some of its regulation policy.
True, and so he has got to play defense very carefully. And the Gigafactory is going to enable basically the cost of these batteries to get less and less expensive. And again, they still have said, we have not named a location. And once they do, there's going to be more speculation on, whose palms getting greased, what kind of deals were made. So we'll find that out when that does come up.
Okay, Elon Musk has always got something up his sleeve. Lauren, thank you so much.
Thank you.
Ahead, you know how your mom told you not to pet the wild animals? Our favorite person of the day did not take that advice. You're watching Rise Exchange.
If I was building my own news network, first thing I think I'd want high-quality reporters, very educated, intelligent people.
Hello, I'm Francesca Maxime.
I'm Julian Phillips.
I'm Wendy Gillette.
I'm Sophia Songhai.
I'm Gary Anthony Ramsey. Thank you for joining us here in New York City.
I would like to see more people of color represented in high positions in media.
We've got world-class journalists, veteran journalists who have been in this industry for decades, not just in front of the camera, but behind the scenes as well.
People need to understand the problems that are going on in the community are much closer than we actually think they are.
Kayla Phillips is one of the shoppers who is suing Barney's, and she is here with her attorney. What is it that you want from them?
Not to judge every African-American person that comes in their store.
Time now for our favorite person of the day, when we pick one person who grabbed our attention and not for the right reasons. You know the phrase, please don't feed or pet the animals? Well, you'd think most people who go to a zoo would know that rule when it comes to the lion den. Renee Ferguson had her finger bitten off at a Michigan zoo because she decided to pet a lion. Ferguson claims, there she is with a shocked look on her face. I can't believe the lion bit me. I have cats at home. Ferguson claims a worker at the Sunrise Side Nature Trail and Exotic Park let her into the lion's cage, and she went. Then she tried to pet the lion, and surprise, lion bit off her middle finger because he's a lion and he's being caged in a zoo. Ferguson apparently is shocked that a wild, untamed king of the jungle animal would attack her, and now she's suing the zoo. But the zoo claims Ferguson actually ignored demands that she leave the restricted area where the lions are kept, and that she claimed she just wanted to pet the animal. And so Renee Ferguson, whose finger became a snack for a lion, is our favorite person of the day. Next, when workers have to bring their own iPads to work, the new policy of bringing electronic devices into the workplace. You're watching Arise Exchange.
Looking at mainstream news stations where only you have a very small minority of people of color being newscasters and actually having prominent roles in the media.
In a newsroom in the United States, maybe 10% of decision makers come from communities of diversity. That's not right.
Diversity is important because the more complete the news is, the more accurate a picture you're getting of the world, and the more you can form an accurate opinion of things.
The vision here is not just to tell the main stories of the day, but to tell the news that other organizations don't tell, and tell it in a way that people like me, people that look like me, that look like you, are interested in.
Arise News.
Arise News.
Arise News.
Arise News.
Arise News, every culture, every angle.
It's a practice that's already popular in Europe, and it is picking up steam here in the U.S. It's called BYOD, Bring Your Own Device, using personal digital devices at work. The initiative reduces costs for employers and increases employee productivity, says some. Proponents claim, however, that experts, however, claim that BYOD can create havoc for companies who don't take the right precautions. Cybersecurity expert and BVS CEO Scott Schober is back here on Arise Exchange to explain it all. So what kind of devices are employers asking their employees to bring?
Well, certainly mobile phones, smartphones in particular, and then, of course, tablets as well. Everybody nowadays has got tablets of all sizes, and they're pretty powerful. They're computers, our smartphones and our tablets. So they're bringing them to work, and as mentioned, it saves time and productivity in some ways.
Does this mean, though, if you're hired for a job and you're asked to bring something and you don't have it, you're going to have to go out and buy it?
Hey, in some cases, they're actually saying that or indirectly saying that, inferring it. Employees say, well, I need a smartphone anyway, or I need a tablet. Here's a reason, especially if I can get the job. So it actually helps the employee in that case.
And what type of workers are being asked to bring these devices to work?
Really, it's spread across the board. Obviously, no matter what the position, just pretty much everybody's got a smartphone now. So it's really spanning all different aspects, all different management levels.
You know, I see some legal problems with this because first, you know, when you take a job, one of the things in an employee handbook, it says we own your email, we own your computer devices, and therefore we have a right, which they do, to look through it at any time and to monitor it. But if you're using your own personal equipment, I'm not sure employers get those rights anymore.
Yeah, that's a really nice point there, because it should be stated clearly, as you mentioned, in the employee handbook. And employees have to realize that it could be scanned. It could be taken in, looked at. Most employers do not do that. It's very rare instances that I've heard of. But they have the right to do that, especially if you sign off in the employee handbook. So you want to be obviously careful what you have on there besides work-related things.
And besides a legal perspective, there is also some security risks that companies are dealing with here because you're dealing with equipment that's not in your control.
Yeah, and that's probably the biggest threat from the employer side. The fear is, what if somebody has apps that they're downloading, it's got malicious viruses or things like that, and now they connect into the wireless system where they're connecting with their company computer. That virus now has a conduit to get on there, and that's really dangerous, besides just the obvious taking the classified or confidential information outside of the workplace.
So if you're an employee, let's say, and the truth is, even if you don't bring your own devices to work, you are using your own devices. Well, what should an employee do? How do you divide up what's yours and what's not yours, and how do you keep the materials safe? And how does an employer protect itself?
Well, obviously, the most basic thing, have your phone, a basic password on it there so nobody can pick it up and just access it. Of course, backing that up and not keeping sensitive things and transferring it on your phone. It's very hard to do that. People have to realize they need to make a conscientious effort not to bring home email and have backups and everything else. So it's not really working well, and that's why it's such a big problem, especially with security.
Real quick, in 15 seconds, who's doing this? Big companies or small companies?
Mostly big companies are implementing it, but now even small businesses, which represents the majority of the companies, are now doing it too, implementing these Boyd procedures.
Okay. Scott Schober, we'll have you back on again soon to talk about this as this issue grows.
Thank you.
Tomorrow, you know, on Arise Exchange, we are going to give you the big jobs report that's coming out from the U.S. Labor Department, July's unemployment numbers. and what all the investors will be looking for, as well as the Fed. Let's take a look at the final numbers again, because it was a little bit of an ugly day on Wall Street. Those are just ugly numbers. Not even going to read them to you. We'll see you tomorrow on Arise Exchange. I'm Andrew Schmertz.